Welcome to Accounting in Focus. I got a request to do a video on contribution margin income statements. So let's talk a little bit about this and how useful contribution margin can be. First, let's look at the format of the income statement. A contribution margin income statement is sales minus variable cost equals contribution margin minus fixed cost equals operating income. So if you wanted to look at this, let's think about what happens with every dollar of sales. Okay, so here are my sales up on top. Every dollar of sales goes into one of two buckets. It either covers variable cost or it goes to contribution margin. What's left over in contribution margin, those dollars go into one of two buckets. They either go to cover fixed cost or it becomes profit. Okay, so every dollar in sales either becomes variable cost or contribution margin. That contribution margin either becomes fixed cost or profit, operating income. Okay, also called profit. Okay, so when we're looking at our variable cost income statement, notice that we're not just dealing with cost of goods sold and selling and administrative like we are in a normal income statement that we think of. Instead, we're breaking out costs based on how the cost behaves. Is it variable or is it fixed? So it does not matter if your variable costs are product costs or selling and administrative costs. If they're variable, they go up on top. Same thing with your fixed cost. It does not matter if they are fixed product cost or fixed selling and administrative costs. All fixed costs go down at the bottom. We can also look at this in terms of per unit. And personally, I like to leave numbers small for as long as I can. Okay, so if I look at it on a per unit basis, I can look at price minus variable cost, again per unit, equals contribution margin per unit. Okay, so let's figure out what is my contribution margin per unit in this case. So I've got $10 minus, what are my variable costs? Okay, well let's take a look at this. Let's go through these and see if they're variable. Remember, a variable cost is a cost that increases as your units of production increase. Okay, if you need a review on that, go back and look at the cost behavior video. So direct material. Okay, what kind of cost is direct material? Well, it's variable. Think about it. If I make 1 unit of my product, my direct material cost is $1.60. If I make 2 units, it's twice that. It's $3.20. If I make 10 units, then it would be $16. Okay, so this is a variable cost. How about direct labor? Okay, direct labor, again, for every unit I make, I'm going to have $1 in cost. Direct labor is a variable cost. Variable overhead, well, that's got the word variable in it, right? So that makes it a little bit easier. That's a variable cost. Okay, what about fixed overhead? Fixed overhead, first of all, it's got the word fixed in it, right? Okay, so that should help us differentiate. Plus, generally, whenever you see a number that's fixed, you're going to see a large number. So see, this is 16,500 compared to all the numbers which are, between $1 and $3. So this big number is a fixed cost. What about variable selling and admin? Well, that's got the word variable in it also. So this cost is also, here, I'll put this over here, a variable cost. Okay, and then fixed selling and admin, well, this has the word fixed in it. So this is also a fixed cost. Okay, so now we know which costs are variable and which ones are fixed. Okay, so now let's go back So my variable costs are going to be, let's put over here, variable cost is $1.60 plus $1 plus $2.40 plus $1.25. So if we add that all together, we get $6.25. Okay, so we'll put that in for a variable cost. $6.25. Okay, so now let's calculate our contribution margin. Okay, contribution margin, 10 minus $6.25 is $3.75. Okay, so now this is my per unit. Okay, this is very useful for doing a lot of different things, and we'll see in the break-even point video how useful that can be. But let's take a look at the relationship between price, variable cost, and contribution margin. Remember, we said that for every dollar of sales, part of it goes into variable cost and part of it goes into contribution margin. As long as these numbers don't change, okay, there is a percentage relationship. So we can say that contribution margin is a percentage of sales, okay, or a percentage of price. So if I wanted to figure that out, I could say contribution margin, $3.75 out of every $10. That equals 37.5%. Okay, so that means that for every dollar of sales, 37.5% will go to contribution margin. This is called the contribution margin ratio. Okay, so every time I have a dollar in sales, 37.5 cents or 37.5% will go towards contribution margin. We can also do the same thing with variable cost. My variable cost is $6.25 for every $10 in sales. So that is 62.5%. Okay, so that means that for every dollar in sales, 62.5% or 62.5 cents will go to variable cost. This is called, you ready for this one? This is contribution margin ratio. This is variable cost ratio. Okay, so now I have these two ratios. So if we have, if we know that the company's sales are $10 million, we know that 67.5% of that's variable cost, 37.5% is contribution margin. Pretty good, huh? Okay, so now let's go back to my contribution margin income statement. Okay, so let's go over here. Now that I've written all over that and we can't see it anymore. Let's go back. Sales minus variable cost equals contribution margin minus fixed cost equals operating income. Remember, operating income is just another word for profit. So if we sold 10,500 units, what would our profit be? Okay, well, let's do this the long way. Okay, so let's fill out our entire income statement. Sales, 10,500 times $10 equals 105,000. So my total sales, $10 per unit times 10,500 is 105,000. My variable cost is going to be $6.25. Calculate that over here. $6.25 times 10,500 units is 65,000. $6.25. So my contribution margin is $39,375. And you notice if you take $3.75 times 10,500 units, we get 39,375. Okay. My fixed cost is 16.5 plus 13.5. If we add those two together, we get 30,000. So let's put a plus sign here so we know we added them together. Okay, so it's 30,000. So my total operating income is $9,375. Okay, there's my profit. So that's my format for the contribution margin income statement.